Maybe it's Maybelline. All right, so closing the day, a couple bips below where I said last night, but right where I said an hour ago. Just stuck on things. Yeah, this looks bad. We got a reversal yesterday. It kind of petered out in the overnight session. Then we failed on the ISM data, proving to be a little bit more inflationary than expected. The bounce on the right side of this does look a little bit distributive, and that does open some more room to the downside, potentially back to last week's lows. Although I do think that the 62.89 support is of some importance. So keep an eye on that. Dollar up ever so slightly, with yields at the top end of the curve down, with the exception of the 10-year, which closed slightly up for the day. The 2-year moved up after a horrific 3-year auction that carried a 7 bip tail and had almost 18% primary dealer. Almost 18% of the auction was taken by prime dealers. The Treasury also announced a $100 billion 4-week auction, which is the largest on record today. After everybody levered back into the dispersion trade, that largely broke down today. Still some ways to go till we're back at the levels that we were at on the prior day, but the dispersion trade is breaking down as volatility increases. On the commodity side, not too much going on. Oil's still falling off pretty sharply, which does hint that there is some fear of a recession. Not only that, but the move in like short-term bonds to the upside also kind of hints at, recessionary predictions, but starting to get a little bit of outperformance from gold and silver recently. Correlation on the 3-month continues to move up. Bond volatility is still fairly low. If that gets back over 100, a little bit more interesting. Leverage on the carry trade bounced back, but bounced back earlier today, would continue to break down into the end of the day. And the forward yield on volatility now at negative 2.57%. Not much of a change in the bond curve there. Skew continues higher. Obviously, out of the money put demand is picking up. Yesterday's bounce back wasn't super great for stocks above their, like moving stocks back above their 20-day moving average. Still 35% of the index there. Although stocks above their 50-day moving average bounced back to about 50%, and then 200-day moving average to 47%. So in the short term and the longer term, stocks are, like, the majority of the index is still weighted a little bit to the downside. Seems to be more breadth in the sell-off than there was in the run. Volatility was still getting shorted today, despite the increase. There was still some fairly heavy volatility shorting, which makes me think that if we do get continued downside into the end of this week, it's likely to be very slow progress. We've shaved off enough from like the all-time high that I think bulls are feeling fairly comfortable here. That risk is somewhat priced in. I would keep an eye on that though, because if we're continuing to see correlation and volatility fall, we might start to see a bit of a reversal. Fed fund futures pricing down a little bit today with the slightly inflationary ISM data, so pulling back from the expectations for 50 points of cuts by the end of this year, moving down to like 42, 65 by March, and 86 points by July or June of next year. Bear steepener, well, I guess we saw a little bit of bear steepening. 2-year up significantly more than the 10-year there. On this side of things, we ran into the trend test yesterday. Failed that. This is not the 1 day. Sorry. Ran into the trend test on the daily. Failed. Fell back below the local trend that we were retesting. We could now, start to fall further. Obviously, 62.90 is the first level that we'd want to be watching here, and then 62.01 is the next level to confirm a failure. Locally, I would say 62.90 and 62.71 probably signal confirm for downside this week. 6201. I mean, we might be able to revisit it by end of week if things continue to sell off, but that's a very important level because that was where we got support after we like gapped up in June. So or well, beginning of July, end of June. So yeah, we'll keep an eye on that. Anyway, I think that's about it. So thank you so much. I will see you guys tomorrow. Later.